Today, folks, I need to explain to you why I sold my interest rate recovery plays, DRN, my triple leveraged REIT ETF, XLU, my utility sector ETF, in favor of my three-fund strategy that has always been the core foundation of what I've been trying to build, which we're going to break down in this video between VDY, SCHD, and VOO in this over $323,000 stock portfolio that just an odd year ago was only worth $170K after a mass liquidation event to purchase a piece of real estate. I also want to talk about some of my best trades this year, and I actually haven't had a losing trade this year, which is crazy to consider, but we're going to talk about Tesla when I sold it to buy VDY. I also want to talk about some updates in these stocks like Meta, the one my wife holds that has continually been just hitting all-time highs. I feel like we can't damn well lose, but I'm very conservative in my investing nature, and if you want to learn from me, not as financial advice, but something of tidbited, like a squirrel without a nut, trying to find that nut, consider going down there on a path to financial independence to one day retire early. Subscribe, hit that dream button, baby, that big dream button, that like down there as well, because I need to roll back for you. I want to talk about the accounts first and foremost. So right now I've been trying to build back my tax-free savings account. Now it's worth over 100K, right? 104,000. In this account, I have been swing trading some trades this year. What do we do? I mean, we sold Tesla, we'll talk about it in a moment, but recently we got rid of DRN, my triple leverage REIT ETF, along with XLU. Now I did these at about a 7 to 10% gain on each of them about mid this week. And I did them just in favor of continuing to buy the S&P and VDY. I want to get 100K in VOO and 100K in VDY. And obviously I've been holding these for about a month. I don't think I'm too late to these just yet. As mentioned, as more interest rate cuts come into play, I think these are going to continue to perform exceptionally well. But we got to recognize when you're 3x leverage, there's still volatility risk with markets. I mean, you could get a black swan, anything could happen, and this thing could be highly, highly volatile. And considering it popped up so much, I was able to get out of it at about 1368, which I thought was pretty nice, taking in a quick 7%, 10% gain. Same with XLU. XLU could absolutely be a long-term holding in a portfolio. I think it's a great ETF to remove some of the volatility, right? It's something that I had lack of exposure to. I'm just looking at it as it's gone on this historic run. And as some of you mentioned, I might be a little late to this, which is why I was just looking at the gains. I'm like, let me lock them in and let me kind of pivot them into my core portfolio strategy, right? Now, that doesn't mean they're not good long-term investments. Don't get me wrong. I am a squirrel looking for a nut, guys. I'm constantly like looped, and it's worked to my favor for the most part. And again, in the short term, it looks like it's working to my favor because XLU is down. DRN is actually down quite a little bit from where I just recently sold it. It's actually almost back down to my average buy price. Meanwhile, SCHD, VOO, and VDY have actually been doing quite well into the latter half of this week. Again, that's just luck. I'm just trying to do what works best for me, and it's always kind of just a little bit of a psychological warfare game, considering SCHD has been one of the worst performers this week. Actually, some of the building stocks, incomparable to, say, the REITs themselves, like the home builders, have not been doing that well. Actually, quite a few dividend stocks were selling off, which was a bit of a surprise to me, considering VOO has been up, VDY has been up. So very perplexed into why this is happening. But nonetheless, I still think as interest rates cuts come into play, VDY will keep doing well, and SCHD should start seeing a turnaround with some of those top holdings that we talked about yesterday. But SCHD and VDY and these interest rate recovery plays will never be the core aspect of my portfolio. As I've mentioned, I still think tech is primarily the future. That's why VOO is always the dominating factor. Because it's the dominating factor, it allows me exposure of over 20% just to technology stocks. And I think with the advent of AI over time, all these robotics, all this stuff is going to be massively margin expanding, and these are the most resilient companies on the planet. So I don't want to limit my long-term time horizon exposure to those, which is why I'm always taking profit, always putting it in there. And luckily, it's not considered day trading, so it's all cash tax free, baby. Tax-free till I motherfucking die. I love my TFSA, baby. Let's go. So let's talk about the past to the kind of present within the year, because the last big trade that I had real luck with was Tesla buying it in the 180s, selling it on the big pop that it had leading into a event of the robotaxi release, the mass market vehicle, which is now coming up in October, which is driving up more hype into the stock, which is kind of getting into some pretty insane territory at 71 times multiple. As you recall, I sold that at around 248 after buying it 180 to pivot pivot all those capital gains into VDY, which is now up another 7% since I purchased those. Now I kept buying shares all the way up. I think right now we're sitting up about what, 6.7% on VDY. So we definitely were able to itch out a few more gains, which was really nice to see. But in the long run, if Tesla starts to excel its performance, brings back some revenue and cash flow earnings, it might have looked like a mistake for me to sell it in favor. Now, this is a company I find where Elon overpromises, underdelivers, but still brings some pretty crazy stuff to the market, which leads to like 5-10 year cycles where the stock just doesn't do anything, right? And I have a hard time being a part of that because I recognize that over these 5 years, if you just put it into the S&P like I did or SCHD, like you've been actually itching some much better returns with dividends. But Tesla is heading into an event October 10th, and I think we are on the cusp, the forefront of finally seeing, robotaxis come to scale. Now, I thought it was going to be flip a switch and everyone's cars become a robotaxi, but I don't think that's going to be the case. I'll explain why. But firstly, they just updated Smart Summon, which is absolutely incredible. I mean, just take a listen.
Tesla has released a new version of actually Smart Summon, and I gotta tell you, I have been absolutely blown away by the improvements I'm seeing in just one single update. As you probably know, I always try to push the limits as much as possible to show you what it's doing well and what it struggles with, but I had a difficult time finding the limits on this version, and as you see some of the situations I put it through, I think you're gonna agree that it wasn't from a lack of trying.
So I really feel like, Elon's been really doubling down and putting a lot of effort into this, because from the last update to this update, Smart Summon almost seems flawless. And we've also been seeing videos come out of people like taking my Tesla, picking me up at the grocery store and taking me home with basically no interventions. And I think what's going to happen with this mass scale robotaxi, it's going to be the competitor to like Google Waymo, where basically they're going to start rolling the robotaxi out in their own network where there's the least amount of basically cities where there's the least amount of interventions. And I don't think this is going to be a flip a switch and everyone gets robotaxi capabilities so they can send their car out to do robotaxis. I could be wrong, but it is my guess because there's still edge cases where this has issues and you cannot have that at scale. So I think they're going to be very cautious about how they do this. And again, I'm still skeptical on the growth of the company and hoping that we see a mass correction at some point back down to the 152 range. I doubt it. It's a hype stock. There's always going to be core, hypesters in here, but I would like to pay a better valuation for the stock, which is why I just can't hold it today outside of my exposure to the S&P. Whereas the other spectrum, the wife, our biggest single stock position, is Meta, which is crushing it right now. I mean, it's up 64% year to date, still pressuring all-time highs, and we recently just got some updates on their major innovation. I mean, basically, Mark Zuckerberg has this goal where he wants to take the VR headset where it needs to be to work today with the tech we have, which is this big headset that I'm using still every week, and then he wants to try and form factor it into something that are just glasses. So why not just take glasses, figure out what tech we can put in there today, make what we need for VR, and slowly merge them until we get this. Now, Orion by no means is perfect yet, but it is still pretty astonishing, and you can't buy this product right now. It's just demo. There's a wristband you have to wear that allows you to input just hand movements to get clicks and actually interact with the augmented reality. And they do show some clips in here, and it is quite good looking. Again, for what it is, it's not flawless by any metric, but again, this is still early days, and the fact that this tech is here and it is as good as it is now is still jaw-dropping. And I love the memes. We all live for the memes. This is where the inspiration for the glasses came from. Got some Scooby-Doo going on in here. You got some Dexter. I know this is an old kid show. This is a flashback for me here, but I'm very impressed. And it's, again, the core reason that I want exposure to tech, because even though I'm looking to fast track retirement, I want to be there before I'm 40. It doesn't mean I'm going to retire, and I am a total return investor still, and I'm only getting about a 2.33% yield on this portfolio. But again, the goal is to get about a 50-50 split between the S&P, VDY, and SCHD. So over time, as I scale this, the goal is to have 200,000 in VOO, which right now we have about 177,000, SCHD 100,000, which we're about 10,000 off, and VDY we're about 60,000 off, from having a goal of a rounded $400,000 to $500,000 portfolio. And that'll be my kind of short-term dream before I get to 40, while I also try and continually fast track the payments on the piece of real estate we paid so we can pay it off before we're 40 as well. But these are kind of just the general updates, some of the cool stuff that I'm paying attention to in the market, and I'll pass it off to you. I'd love to know what you're trading, how your portfolio is doing, what your next trade is. I'm still formulating mine, but I'd love to hear about all of it in that comment section below.